In this video, we're going to talk about buying pullbacks in strong trends. Stay tuned. Hey traders, a very warm welcome to you. I hope your trading is going well. Okay, so buying pullbacks in strong trends. So uptrends we're going to talk about today, but you flip on its head for downtrends. A little bit different because it's a little bit more aggressive, but the premise is the same. So a couple of comments through on some other videos and some messages, and appreciate all your comments and all your messages that come through. Thank you for those. This is something that a lot of traders struggle with, and I know that I do myself, I know others do. It's a big thing. You've got a big monstrous trend happening, an uptrend or a downtrend. You want to get on board as a trader. You know you should. You kind of, I know I want to be on board. This is a good trend. It could go on for a long time. It's only had this. I need to get on board it. How do I get on board it? What strategy do I need to get on board it? Well, the first thing to note, guys, is that I'm going to come to some strategies in a second. But the big thing is it doesn't really matter how you get on board on it as long as you manage the risk. You know, as long as you say, okay, this is my allocated capital to get on board this trend. This is how wide my stop needs to be. This is how wide, this is my position size, and just pull the trigger on it. Even that is okay. Okay, yes, we're going to go a little bit deeper and find a strategy that kind of has an edge that can play out over time. But even if you said, okay, let's put that in perspective. Even if you took the ATR, okay, daily ATR, let's say you're swing trading, you take 3 times the daily range or something like that, and you say times 3, there's your total risk in terms of pips or in terms of points or whatever percentage. Divide that by, allocate your capital, whether that, £200, £1,000, £10,000, £100, whatever it may be, whatever your risk capital is per trade. Divide that by the total stop you need and pull the trigger. Okay, that's one way of kind of doing it. And in fact, you can even say, one other way is to say, what about if I look at the biggest pullback we've had on the up move? So I'm looking at the up move and I'm saying, okay, what's the biggest pullback we've had? Okay, it's this one here. And this one was, I don't know, 200 pips if I'm talking with Forex, or 200 points or X%, 5%, whatever it may be. Then add a little bit more and say, okay, well, my stop on this trade should be 250. So I'm going to buy and I'm going to use a 250 point stop. Right, we're going to talk about how we kind of pull the trigger and filter a better buy, but even just doing something with a risk management strategy in place is fine. I think it's absolutely fine. Trends are going to continue, and I kind of hesitate to say this a little bit, but even buying, as you're pushing to new highs, as long as you've got an adequate risk management strategy in place and you're prepared for pullbacks, isn't the end of the world. Just being on the trend is kind of the best thing. Now, I wouldn't do that myself. I'm not someone who likes to buy at highs and just chase trades. It means I miss a hell of a lot of trends, but it's the way it is. I prefer to finesse my entry a little bit on the pullbacks. That's what we're going to talk about now. But I want to get this point out there right away, which is, if you've got sensible risk, you've got sensible kind of depth of the stop, if you're in a good trend, it's likely going to play out for you. But as long as you have the risk capped, you don't have to fear going into it. Because buying the pullbacks in strong trends, the reason people don't is they fear going in and getting stopped out. But if your stop is wide enough to accommodate the noise, then you don't need to fear it. It's just like any other trade. And yes, you might have to go in a really small position size, but the point is it gets you on board then. Even if you're going very, very small because you've had to use a wide stop because you kind of can't finesse it and you've got no strategy for getting on board it, you're just buying this uptrend because it's really, really strong. It gets you on board. And then once it gets you on board, then you can start to you can finesse it. Maybe you can add to the position, you can pyramid in, you can kind of do these things and work around it. But sometimes getting on board, you're almost blindly, and I say I don't recommend doing that, but even if you're doing that, if the stop is wide enough, you're good to go. All right, let's look at some strategies for getting on board an uptrend that we can finesse it a little bit, because we're traders here, aren't we, guys? We're not here just kind of blindly buying stuff. Although at the end of the day, like I say, it's not my thing, but I know people who are making a lot of money just buying at highs on strong uptrends, because an uptrend's an uptrend, it's going to keep pushing. So one way of doing it is to, we kind of look at the move up, and again, this will be from a swing trading perspective, day after day after day, pushing up. We pull back. We can use things like trend line breaks, so we can kind of say to ourselves, all right, this is going to be a lot kind of symmetrical than normal, but we can say to ourselves, okay, well, I'm going to draw a line here, or it'll probably more likely be here, but whatever it is, I am going to wait for that momentum to continue and then buy. And that way you don't get caught in a full reversal, because if it reverses, all it's going to do is carry on moving down here. And it gives you a kind of reason to wait, because if you're at this point here, you're like, well, I'm waiting for my pullback, I'm waiting. Okay, a pullback's happening, start to draw my lines in. Okay, it's pulling back, okay, now we go. Now you can either take it on an intraday break above, or if you're a little bit more conservative, wait for a close above that trend line that you've drawn, take the trade. And of course, the stop then becomes very, very simple, because you're just putting a stop at the, let me use this, you're putting a stop at the low of the move before we broke, which is here. Very, very quantifiable risk, an easy way to work things out. Okay, another one, number 2, let's go the red pen here, is to use a reversal strategy within that trend. What I mean by that, so your candlestick patterns, for example, your bullish engulfing. So let's say you've had a reversal. Have I drawn the smallest candle ever for you guys? I've got the whole whiteboard here and I'm drawing a small candle. I'll do a bigger candle and I'll rub it out in a second. All right, so let's say we have a bullish engulfing. So we've got this kind of down move, down move, down move. Assume we've had a big uptrend here, down move again. Again, very symmetrical, but you get the point. Then we get that bullish engulfing candlestick, which is when the body of the candle completely engulfs the prior day's range. Then we can use that as an entry. We can say, okay, right, we're going long here. All right, so anything like that. Or we could use, that's the candlestick pattern. We could use something else like a double bottom, for example. Okay, so the chart's moving up, comes down, we get a pullback. We say, okay, now we want to buy on a push through this low and a push back up. So we kind of push through the low, push back up. There's our buy. Maybe we have an inverse head and shoulders, so we're pushing up, we're kind of doing this, and we're buying on a break of the neckline, whatever it may be. The point is bolting in something that we know generally has a statistical advantage within that uptrend or within that pullback. So the engulfing candle alongside after the pullback, after we've seen kind of this move up, the trend line break, the double bottom, the inverse head and shoulders. There are many of them, aren't there, guys? There are absolutely many of them. So, using that within that pullback helps you kind of fine tune it. And then again, it comes down to that risk management. If you're taking that and you're kind of using your stop there, if you're taking that, you're using your stop there. If you're taking the engulfing, your stop's there. It's just finding a place, which is why I kind of mentioned this at the beginning, where you can quantify your risk. It doesn't matter kind of which strategy you employ so much as where you can get involved, where the risk is sensible to you and where it's quantified. Why I don't like chasing stuff, because for me the risk is too high. My position size is too wide, should I say. So my position size has got to be too low to make it really worth my while. Whereas if I can define it a little bit more, I can increase the position size because I know that my stop is a little bit tighter based on this kind of setup within the broad setup of the trend, and I can go a little bit more aggressive and still play for that longer move. So it's tricky. I know when trends are strong, you kind of say, oh, I need to get in. I know I should be in it, but I haven't. But sitting down, devising a plan, a strategy, a way of getting in, a way of reacting, but not reactively, but reacting as in, okay, putting together a strategy, a setup for that particular stock, currency pair, whatever it may be, crypto, whatever it may be, and then implementing it when the time comes. And that will help you get on board these trends, because you're not looking at it then as a monster trend, you're looking at it then as you're missing out on, you're looking at it as a monster trend that ultimately is something that will more likely do the pattern that you want it to do and allow you to get on board it without just blindly going into it. All right, guys, but the main thing of that is keeping the risk managed, whichever strategy you use. Whichever setup you're using, I think is fine, but keeping the risk managed and having a sensible kind of stop level, whether using the ATR or whether using it based on a pattern-based stop on these examples here. All right, guys, buying pullbacks in strong trends or selling pullbacks in strong downtrends, uptrends, downtrends, same kind of thing. Flip on its head. If you like the video, thumbs up, comments in the comment section below. Take care. See you in the next one. Goodbye.